whole new chapter begun after everything that's happened over the past 48, 72 hours.
Yeah, disturbing chapter has begun, I'm afraid.
Epilogue.
Yeah, but you could get a bounce here or there, because I don't know what global markets will be like, because it seemed like a very severe reaction that happened on the Dow. It fell 400 points. So maybe on a closer reading of the unemployment numbers, the US will decide they've fallen far too much, far too quickly, and there's a little bit of a bounce. Remember, the market is heavily short, so if there's a little bit of a spike or good news which comes in from any quarter, you will get a bit of a short covering rally coming in. So a market which has got crunched down to 44, can it bounce back to 45, 45.50, 4600? Entirely possible, but those are trading moves. They will always come in. I think the screen is shouting out very loud that things are not good for equity markets right now. And you want to not completely disheed the message which is coming in from the screen at this point. So opinions are opinions. They don't make markets. So right now, it's not a great idea. I could be wrong. The expert could be wrong. The person could be wrong. It's not a great idea to stick your hard-earned money into some opinion or the other. You just need to step away. It's a bad market. Anybody can see that. It doesn't require a very smart mind to see that we are in a very difficult equity market. You don't want to put a lot of money and get it wrong at this point in time. At best, what will happen? You will lose 300 points of a bounce on the Nifty, and then if things are improving, you can get back then. You saw what happened last time around. You got a bounce, people were sucked in, they bought it saying bull market is resumed, and they're losing money. I don't think investors have made a lot of money in 2008 at all, at whichever point they would have bought. So the screen is telling you that this is a tough environment to make money out of. Why do you want to lose money? I mean, you've got to protect capital in this kind of a time. So I think now, as the signals are coming in, FDs are once again giving you 9%. You're getting FMPs giving you 9 to 10%. Let the picture clear a little bit. It's no point being brave. No point doing all this cowboy stuff. Just stay away, chill out, let the market recover, and then take
Chill out, did you say? More like fried.
No, it's difficult, Mitali.
Yeah.
When it's difficult, it's difficult. I mean, that's what you see. I mean, there's no point banging your head against a wall. I mean, the market is the market, and right now it's a bad market. It's been a bad market for 6 months now, no matter what anybody said or what anybody thought. So when you are in a bad situation, you don't want to lose money and throw away capital out here. So just let things clear out a little bit. Just accept the fact that it's a tough one right now, and you don't want to get sucked into it. It's had no easy answers at this point. You go on asking people the most bullish answer is that hopefully things will clear out in 6 months' time. That's not good enough. That's not good enough.
It's not good enough this morning either. 700 points, so we're moving a little bit lower. Just a related question on that though, then, because there hasn't been that much talk or pain by way of local redemption pressure. Might that as well become something that will hang over the market's neck?
I don't know. The global redemption pressure is visible, so you're already seeing the large guys starting to pull out. So far, the mutual fund investors have been a very resilient lot. I think the first sign is that the NFOs have dried up, so people are seeing that they will not get a lot of money from local investors right now. I think around these levels, people may not redeem, but if, heavens forbid, we go back to those 4,000 kind of levels and you see sub 14,000 kind of levels on the Sensex, I have my fears, because then you're going back below the August levels, and then a larger body of people start losing money on their NAVs. So, I mean, the more you get back into history in terms of killing the cushion of profits, the more dangerous it becomes for redemptions to come in. So I think below August, if we do get there, some people would start panicking and throwing in the towel on their mutual fund investments. So far it's not happened, and that's probably one reason why the markets have held up. But one fears in this kind of environment what can happen. I think you should be prepared for the worst for 2008, but let's see, maybe 2009 will be much better. These things come in cycles. They always go in cycles. But I think as the point has been made, some people who have just come into this party 2-3 years down the line, they've not seen cycles. Not that I have been in the market for 25 years and have seen it all, but it's just that when you've seen bear, bull, bear cycles, then after 5 great years, when you see a really bad year coming in, then you don't want to get too heroic and say, the long-term bull market is intact, this is my time to get in and buy stocks. You know that a cyclical dip is going through. It's a tough time. You need to protect yourself through this cyclical down market so that when the cycle turns up again, you're not burnt out and in coma.